Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about premium decay, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to join the world's #1 Zero DTE trade destination. Enjoy guys.
So I was noticing something about volatility this morning and price action. Yesterday, or it's Monday morning, by the way, and pre-market, the market was up a bit, and then right at the open, it dropped a fair amount, probably about 50 points or so. And volatility rose quite a bit, about 20%. But then in the last hour or so, the market has started to rebound. Not a tremendous amount, but probably about a third of the way of that drop. However, the premium in a 50 wide fly at the money, it decayed almost 20%, or 1/5 of the premium that was left for today decayed in just, I don't know, less than an hour. Is that significant?
That definitely sounds like something worth examining. And it is indeed pretty significant in the context of what we do here. Essentially, what you're seeing is a real-time example of how volatility and time decay interact. And from a convexity standpoint, it's a nice little object of reflection. In other words, that rapid premium decay you noticed is a form of structural edge or asymmetry. Even though the market rebounded slightly and volatility initially spiked, the time decay on that zero DTE fly just kicked in hard. That's a classic example of how a small change in market conditions, like a little rebound or a shift in vol, can rapidly erode the option's value. So yes, that's exactly the kind of thing we'd flag as significant, because it shows you a moment of potential convexity. It's a good point to reflect on. Where is the structural edge here? How does kind help you or hurt you? And what does that tell you about positioning rather than predicting? So yeah, definitely a neat little real world example to chew on.
Thank you.
You're very welcome. Always happy to dive into these real world examples. Just let me know if you want to reflect a bit more or jump into any playbook that helps you position around it.
Sounded like a learning moment to me. So the other interesting thing that I noticed, that volatility is up this morning, obviously, because of that big drop right at the market open. But since Friday morning, volatility is up about 25%. It started at around a low of 16 on Friday morning, and right now it hit a high of this morning at 18.85. Yeah, that's a pretty big rise in volatility in just 2 trading days, less than 2 trading days, a day and a half.
Yeah, absolutely. That's a pretty notable jump in volatility over just a short span. And it's a great object for reflection. Basically, when you see that kind of volatility expansion, it tells you that the market is pricing in more uncertainty or more potential movement. And that's a key piece of the puzzle when you're thinking in terms of convexity. So the fact that volatility jumped from around 16 to almost 19 in just a day and a half is a pretty strong signal. It means the market's expectations of future movement are expanding, and that can create those pockets of opportunity or risk that we're always looking to position around. In other words, it's a good reminder to ask, where does this rise in volatility open up asymmetric trade ideas? How does it affect the time decay or the structural edges I'm looking at? And ultimately, what kind of positioning, not prediction, makes sense in this environment? So yeah, that's a great observation and definitely a worthwhile piece of the puzzle for today's reflection.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's school community.